In this video, I'll guide you through an all-in-one indicator used for ICT, SMC, or price action trading. Price action concepts focus on reading past price movements to make trading decisions without relying on indicators. Traders love using price action because it offers a straightforward way to understand market sentiment and behavior. By spotting patterns, trends, and key levels like support and resistance, traders can make more informed decisions. This method is popular because it's simple yet effective for finding high-probability trading opportunities. This method focuses on monitoring smart money, the capital that has entered the market through institutional and large traders. This trading strategy includes various concepts. However, trading based on price action alone can be very challenging because it requires a deep understanding of market patterns and the ability to interpret them accurately. This is where a price action concepts indicator becomes crucial. It simplifies the process by automatically identifying key levels, market structure, and trends, making it much easier to become a highly profitable trader. Now I want to introduce an indicator that automatically identifies and displays many of the SMC levels you can use for trading. To add this fantastic indicator to your chart, click on Indicators, search for Price Action Concepts, and select the one published by LuxAlgo. It's a premium indicator that you can test risk-free for 30 days using the link in the video description with up to a 20% discount. For an even better deal, opt for the annual payment to save up to 50%. The indicator is now overlaid on the price chart, and as you can see, numerous lines, levels, and labels have been added to our chart, which I will explain in detail. Currently, we are on a 4-hour time frame, and this is the most recent candle we have. As you can see, this indicator displays the daily time frame's highest and lowest prices. This is the highest price, and this is the lowest price of the last candle on the daily time frame. These levels are crucial and often act as support or resistance, which is why many price action traders closely monitor the highest and lowest prices of the day. Additionally, when the market opens on a new day, meaning when a new candle on the daily time frame appears, the previous day's high and low become very significant. Alright, as you can see, we have a premium zone here and a discount zone there, which are essentially zones of interest. The green zone at the bottom is an area of interest for buyers. They view it as a cheap price to buy, hence it's called the discount area. The red zone at the top is an area of interest for sellers. They see it as a favorable price to sell, so it's known as the premium area. These are actually supply and demand zones, which can offer good opportunities for opening a long or short position, especially when the market moves into a range. So, if the price reaches this area, we know it's of interest to buyers, meaning demand will increase here, pushing the price up. Conversely, when the price reaches this area, it's of interest to sellers, leading to increased supply and causing the price to drop. Alright, next we have other areas that show volumetric order blocks. In case you don't know what an order block is, order blocks are price ranges in the market where large market participants, like institutional traders, banks, or hedge funds, have previously placed substantial buy or sell orders, causing significant market movement. In other words, order blocks are areas on the chart where a large volume of orders has been executed. Essentially, order blocks are identified through price action, where we look for areas where the price suddenly changed direction and experienced considerable movement. For example, here we had a sharp price decline, or here the price turned to an uptrend. Identifying order blocks in practice requires experience and skill in price action analysis, but with the help of this indicator, you can easily have order blocks identified on your chart and seamlessly incorporate them into your trading strategy. Traders, if you like this video, don't forget to like this video and subscribe to my channel. Alright, the next SMC concepts this indicator displays are break of structure and change of character. If you're familiar with the smart money concepts trading method, you know what these labels signify. Here, when the price is advancing in an uptrend and makes a higher high followed by a pullback, this high can act as a resistance level. When it's broken, it's called a break of structure, as shown by the indicator. Similarly, when the price is declining in a downtrend, like here for example, a lower low is created and then the price goes for a pullback. This low can act as a support level, and when it is broken, it is also a break of structure. Change of character occurs when we see a market reversal. For example, if the price is declining in a downtrend and the last lower high is broken, meaning the price breaks above this last lower high, it indicates a change of character, suggesting the market is likely turning to an uptrend. Similarly, when the price is advancing and the last higher low is broken, meaning the price closes below this last higher low, it signifies a change of character, indicating the price is likely shifting to a downtrend. Please note that this indicator shows break of market structure and change of character for both internal and external structures, meaning short-term and long-term trends. The ones with a dashed line represent internals, indicating shorter-term structures within the longer-term trend. The ones with a solid line indicate long-term or swing structures. For example, here the market is in a downtrend, and when this lower high is broken, it signals a change of character for the long-term structure of the market, suggesting the probable start of an uptrend, indicating a longer-term trend reversal. For long-term structures, the indicator also shows lower highs and lower lows for downtrends, as well as higher highs and higher lows for uptrends. For instance, in this downtrend you can see labels of LH for lower highs and LL for lower lows. These labels make it easy to identify the current market trend. When we see lower highs and lower lows, the market is in a downtrend. Conversely, when we see higher highs and higher lows, the market is in an uptrend. This indicator also highlights fair value gaps. These blue zones are bullish fair value gaps, and the purple zones are bearish fair value gaps, and they are indicating inefficiencies or imbalances in the market. These imbalances appear as a three-candle pattern. The middle candle is relatively large, while the lower shadow of the preceding candle and the upper shadow of the following candle do not overlap with the middle candle's body. Additionally, there should be no overlap between the bodies of the middle candle and the two bordering candles. This is an example of a fair value gap, which the indicator has accurately identified on the chart. Fair value gaps can act like magnets for future price action, functioning similarly to supply and demand zones. When the price reaches this area, it suggests a likely reversal in the opposite direction. There are many more concepts that this indicator can display, such as trend lines, patterns, equal highs and equal lows, liquidity grabs, inverse and double fair value gaps, volume imbalances, opening gaps, as well as Monday's, weekly, and monthly highs and lows. However, for the last concept in today's video, I want to show you the automatic pattern detection. For instance, here the indicator has detected an ascending broadening wedge, and you can see this information displayed on the dashboard in the upper right corner. An ascending broadening wedge is a chart pattern characterized by higher highs and higher lows, with the trend lines diverging. This pattern often indicates a potential reversal from an uptrend to a downtrend. To trade using this pattern, wait for the price to break below the lower trend line. For more confluence, you would need to combine this signal with another concept, such as a break of structure or a fair value gap, to confirm the trade setup before entering. Alright, that's it. Thank you for watching this video. Remember, you can test the indicators 30 days risk-free using the link in the video description for up to a 20% discount. Or to save up to 50%, take the annual plan. Make sure to thoroughly understand and backtest any trading concept you pick up from YouTube before risking your own capital. If you want to learn my best strategies for trading Forex, cryptocurrencies, and stocks, check out one of these videos.